Hey everyone, welcome back to Financial Knowledge. In today's video, we're diving into the exciting world of options trading. Whether you're a beginner or looking to brush up on your knowledge, this video will cover everything you need to know to get started. So, let's jump right in. Segment 1. What are options? First things first, what exactly are options? Options are financial contracts that give the buyer the right, but not the obligation, to buy or sell an asset at a predetermined price within a specified period. There are two main types of options: call options and put options. A call option gives the holder the right to buy an asset. A put option gives the holder the right to sell an asset. Think of options as a way to bet on the future price movement of a stock or other financial asset without actually owning the asset. Segment 2. Key terminology. To trade options effectively, it's crucial to understand some key terms. Strike price, the price at which the option holder can buy, call, or sell, put the underlying asset. Premium, the price you pay for the option. Expiration date, the date when the option contract expires. In the money, ITM, when the option has intrinsic value. Out of the money, OTM, when the option has no intrinsic value. At the money, ATM, when the option's strike price is equal to the current price of the underlying asset. Segment 3. How options work. Now, let's see how options work in practice. Suppose you believe a stock will rise in price. You could buy a call option with a strike price of $100. If the stock goes up to $120 before the expiration date, you can buy it at $100, making a profit minus the premium you paid. On the flip side, if you think a stock will fall, you can buy a put option. If the stock price drops, the value of your put option increases, allowing you to sell at a higher strike price. Segment 4. Risks and rewards. Options trading can offer significant rewards, but it's not without risks. Pros: leverage. Control a large position with a relatively small investment. Flexibility: multiple strategies for different market conditions. Limited risk for buyers: you can only lose the premium paid. Cons: complexity. Options can be complex and require a good understanding of the market. Potential for significant losses, especially for sellers of options. Time decay: the value of options decreases as the expiration date approaches. Segment 5. Common strategies. There are various strategies you can use in options trading, depending on your market outlook and risk tolerance. 1. Covered call, selling a call option against a stock you own to generate income. 2. Protective put, buying a put option to protect against potential losses in a stock you own. 3. Straddle, buying both a call and a put option at the same strike price, betting on volatility. Each strategy has its own risk-reward profile, so it's essential to understand them thoroughly before diving in. Segment 6. Getting started. Ready to start trading options? Here's a quick guide. 1. Open a brokerage account. Choose a platform that offers options trading. 2. Educate yourself. Read books, take courses, and follow market news. 3. Practice with a demo account. Many platforms offer simulated trading. 4. Start small. Begin with a small investment to minimize risk. Options trading can be a powerful tool in your investment arsenal, but it's not for everyone. Always do your research and consider consulting with a financial advisor. If you found this video helpful, make sure to hit the like button and subscribe to Financial Knowledge for more insights. And don't forget to hit the notification bell so you never miss an update. Got questions? Drop them in the comments below, and I'll see you in the next video. Happy trading!